Hi, hello everyone. Good morning, guys. Let's start discussion on very important topic for the development financial institutions in India, like consider specifically for the NaBFID. This interview will definitely help you if you are applying for the analyst role in the NaBFID or the senior analyst role in the NaBFID. So the NaBFID, the question or the we are going to discuss on the NaBFID is a development financial institution. So with long gestation asset and how is it liquidity risk different from the from other banks. In the NAFARs there is no CASA accounts like saving account or the current account, or there is no the deposit from the publics like fixed deposit or the recurring deposits. So what are the sources of fund for the NAFAD, and how to manage these sources of funds so they are liable to pay their liability on time? So that we are going to discuss in this video. So guys, think they don't have the CASA accounts like commercial bank have. So where they go source their fund? So they generally source their fund from the bonds, debentures, or the government investment, or they source their fund from the pensions funds like LIC. They do the insurance funds, or they source from the mutual funds. So these are their sources of fund where they collect the funds in their the pool of account, and then they invest that fund in a different projects, infrastructure projects like rail constructions, road construction, port constructions, airport constructions. So these that will help to grow the Indian economy. So that are the projects, and that project duration is a very long. And also the in in the initial phase, the construction phase, there is no cash flow, though there is no cash flow inflow in that account, and so that's they manage that thing. So that's why they collect the not in the form of CASA. The CASA, the bank has a liable. If you have the saving account balance or the current account balance or the FD, you can go anytime in the bank and withdraw your amount. But if they lend in that form, so they face use a liquidity crunch in that market. So that's why their source of funds are very different as compared to the commercial banks. So let's discuss on this topic in detail, guys, and that will definitely help you to get better understanding in how the commercial bank and the NAFAD development financial institution different, and how they manage their liquidity risks. So let's start discussion. Initially, what is NaFAD and why it is different from the commercial bank? So, guys, NaFAD is a development financial institution which is created under the RBI guidelines. So it has like commercial bank has different RBI guidelines, and the development financial institutions has different guidelines. So currently in India, there is a five development financial institutions in India. First one is a SIDBI. Second one is NSB, National Housing Development Bank. Third one is the Exim Bank, Import Export Bank. And the fourth one is a NAFAD. And latest in the market, that is a NAFAD in 2021 Act, where they created the NAFAD Bank, which is stand for the National Bank for Financing Infrastructure and Development. Okay, so what are the mandates in this video slide? We are going to discuss what are the mandate for the NAFAD, no CASA, and the fundings where they take. So mandate of NAFAD is they are responsible for financing the infra projects. So like the road project, port project, or the energy projects. Project is a long in gestation, and it is a 20 to 30 year uh, project life. So these project will funding by the NAFAD for the infrastructure project. So there is no CASA, can't take saving from FD public. So they are not going to take the CASA account in the form of saving account or the current account or the fixed deposit or the recurring deposit. They did they financing or the funding from the bonds, debenture, borrowing, government to issue the commercial paper, to multilateral banks to take loan from the World Bank, ASEAN Development Bank, or the National Bank, or different banks. They collect fund and to invest that fund in the bonds form to the role or the infrastructure project. So let's move on the next slide where we are going to discuss the core problem and the funding wall that commercial bank will face, and that will be, the NaFed will fulfill that gap. So the assets for the commercial bank like the home loan, car loan, personal loan, term loan, corporate loan. So the might be the ticket size of this bond. Most important thing, the ticket size of this bond is a very low as compared to the ticket size of the NaFed bank. Let's suppose consider the example of 5 year car loan. If you take car loan, on an average, people will buy car at the max to max 10 to 15 lakhs. But and the that amount will, the principal and the interest and the charges, the processing of loan, bank will cover within a at 5 years, but in the form of every month EMI. So, and they can manage with the FD renewable every year and the continuousing the FD from, they can do the, collect that from FD or the fixed deposit or the saving account balance or the current account balance and finance them and take the return of the car loans. But the different ball game and different scheme in the NaFed. NaFed assets are the 25 years highway project, 30 years port construction project, 20 years the solar energy construction project. So toll start after 5 years. So they need to give them the consortium period. So there is no there is only interest received, no the principal amount will receive in the form of the EMI. So that's why they will issue the 10-year bond. They will collect the funds from the government or the banks, and full of the 10 crore due to in 10 year, and after 10 year they need to pay. So just they need to pay the interest rate for the 10 years. After 10 years they need to pay the interest and the total value of bond. So that's thing is there. So they manage after the 10 years, the road will go live and the production will start. The people will use that road, and the traffic rate is calculated, how much the revenue is generated. Then the bank will buy that funding and take provide the interest. So bank will sell out, the NaFed will sell out there the saving. So let's discuss one of the case studies of the Huawei projects. So how the liquidity asset of long gestation period will manage by the NAFTAD bank, how the in practical way happen that thing in the bank. So where we are going to discuss on the one of the case study, which is the most important, and it's a live case study in the market. So RS 35 3,500 crore Have projects is funded by the NAFTAD with 25-year loan and 10-year bond. So in that case, the 3,500 amount will collected by NaFad in the form of 10-year bond. The NaFad will issue the bond and the highway infrastructure bond with some term amount, and that the project for 1 to 4 years build the road with zero income. So they constructing the road, so they are not, getting any amount from that. So it's there is a zero interest, and the bank has, or the NaFed has to pay the bond interest to the bond buyer, the bond buyer, the borrowers of the bond. So that is the cost for the NAFAs, and that need to be managed. And the year 10 must repay the on the year 10 bank, the NAPAD has must repay the 3,500 crore bond, and only the 30% loan are recovered from the loan, because it's just completed 5 to 6 year. It is a 25 years loan. So they pay the interest and the 35% of loan recover. So in that case, what the NAFAD will do? NAFAD has liable to pay the 3,500 crore to the bond borrowers, but they just receive the 30% of that. So they are not able to pay. So what the bond market shut down in 10 years? If at the Types of maturity. If the bond market is set down, there is the interest rate is very high and it is a costly for NaFed. So in that case, what the NaFed will do? So let's discuss how the NaFed manage this in the four development financial institutions tools that utilized by the NaFed. So first one is take out financing, trust and retention account, escrow account, debt service reserve account, and then national development bank status. So let's discuss on the takeout financing. So in the takeout financing, NaFed will sell its 60% loan to the banker after the commercial operation date. Once that get live, then the cash flow will happening, the revenue will generated by that project. So then commercial bank can able to fund such kind of loan with their the CASA accounts like the ICICI Bank, HDFC Bank, Canara Bank, Union Bank, Kotak Mahindra Bank, SBI Bank can buy the 60% loan and provide the loan to them, and that way manage to take out financing option is there. Then the trust and retention account or the escrow account tool goes to NaFed account first. Whatever the amount are collected by that projects, that amount will get first by the NaFed account, and then then amount will the go to the tax or in the form, and then the NaFed will take their the shares, and then the amount will distribute it to different things. So debt service reserve account, so it is on the most important account, guys. Debt service reserve account, where the 6 month interest is kept in FD upfront. So debt service account where the project, the interest that the project need to pay to the NAPAD, that amount will sum up of the 6 months, and that will keep in the form of FD whenever that the lender are not able to provide that, the NAFAD will take the amount from the debt service reserve account. And the National Development Bank status, RBI rules, bank fund, National Development Bank, it easier way. So they have to manage their the liquidity coverage 100% as per RBI rule. But if they funds the National Development Bank, so they need to manage that 60%. So that's the leverage given by the NAPAD. So these are the interesting video. So how the NAFAD with the long-term gestation assets, and how the liquidity risks managed by the NAFADs. So once again, guys, thank you so much for attending this interesting seminar. If you're interested in the quantitative analyst role or the risk analyst role, credit analyst role, or if you are looking for the development financial institutions role, or if you are looking for the business analyst role or the quality analyst role, so please do like and subscribe my channel. I am continuously creating on videos on such topic, so that will help you out to prepare in this topic and get the proper or the high paying salary job in the market. Once again, thank you so much, guys, for attending this interesting seminar.